So Dabur's Q1 numbers overall have been above the estimate, especially a strong beat coming in on the volume growth front as well. The volume growth for the company came in at 34.4%. Even though there was a low base, there is a good volume growth that we are seeing coming around this time. Overall, we saw revenue growth of 32%, profits also up by 28.4%, and the EBITDA performance was also quite strong. So margins saw a 21.1% versus 21.8%. Slight bit of contraction coming in on the margin front, but mainly that is due to the RM pressure as well as the higher ad spends as well as the higher operating costs. Now, let's look at, we spoke to the management, we spoke to Mohit Malhotra, and he gave us a bit of insight on, how is the performance, what are the demand trends going around coming in, and what is seen by Dabur especially. So talking about overall in terms of the demand and the double-digit growth that we saw in the volume, he said that yes, obviously there's a low base effect, but the company believes that they will be able to deliver the strong double-digit growth for the full year even going forward as well. And yes, we may see a bit of a blip coming in on the front of the COVID wave, third wave. That may be a concern, but that if the third wave comes, there may be a slight bit of a blip, but still for the whole year they expect a double-digit growth coming in. Now, other than that, they have also spoken about the healthcare growth. There could be some bumps coming in on the way ahead in the healthcare growth, but that they expect that it will be set off by the discretionary growth going forward, with out of consumption also increasing. They expect that to be set off. Other than that, obviously the immunity items like Chyawanprash, honey, all that has continued to do well and continued to see a strong growth. Moving on, talking about urban and rural growth, especially because rural this time was much more impacted. When asked about that, he said that, obviously rural was impacted, but rural is now showing a V-shaped recovery, and that it's growing. There was a time when it came that urban was growing higher than rural, and he believes that was much more optical because there were a lot of restrictions also coming in during this second wave. But now rural is showing good signs of recovery. A V-shaped recovery is coming in, and he expects that the rural is going to in no time catch up with the urban growth. And for the company, as of now, he did highlight that urban is growing in the range of 46 to 48% for the company, while rural grew at 25% for the company. Now, rural growth obviously had a high base as well, and despite that high base, he highlighted that there is a 25% growth. So he believes that rural growth is going to catch up very soon, and again, we'll see a trend where rural and urban will be both growing at a good pace. Now, certain companies did highlight that, products like sanitizers, immunity products, some of them had seen a bit of moderation. So when we asked Mr. Malhotra, he did say that hygiene has seen a sharp moderation coming in, and that is mainly due to the commoditization of the sector. There are a lot of other players also who have come into this space of hygiene. So that is why the growth is a bit moderate now, is what he highlighted. There is no other reason that there are people are not buying. It's just mainly because of the moderation in the market. Other than that, when asked about price hikes due to raw material increase in RM costs, he said that they've already taken a 3% price hike, and going forward, they may look at taking a price hike, but that depends on how the commodity costs move. They're not in a rush to be taking a price hike as of now. They will wait for at least a couple of months to see whether there is a requirement for price hikes, or if the raw material price is actually moderating, then they will not take the price hike. So they want to maintain their margins. They want to even grow their operating margins, but along with that, they also want to maintain the demand. They do not want to lose the demand due to high product prices, and increase in price hikes could maybe impact the overall demand of the company. So that is what he highlighted as well, and they believe that they will be maintaining this around 20-21% margin for the whole year as well. So surely let's keep an eye out on how they are going to be maintaining their margins going forward. Will they be taking price hikes going ahead as well, and how the commodity costs move?